Good morning, ladies and gentlemen, and thank you to the organizers for inviting me. I'm going to talk about global fintech. I'm going to talk about what does fintech look like around the world, why does China dominate, specifically B2C fintech, what can we learn from that experience of China in other emerging markets, and try to make a few crystal ball gazing comments about where fintech is going to in the next couple of years. But first, before we get into the details, what is fintech? I'm going to give you some definitions in a second of what fintech is by looking at products, by looking at dollars invested, but at a very, very simple, basic level, what is fintech? Fintech is the reimagination of finance. And that is why it's so interesting. That is why I think some of you will have come here. That's why I like looking at this topic. I've been working at Citi for 20 years, analyzing financial companies, and for a lot of that time, it was getting kind of dull. We've been talking about regulation, capital, too big to fail, Basel 1, 2, 3, 4. And now we're looking at a change in the industry that hasn't happened for many, many years. There's a joke, I think it was former Federal Reserve Governor Volcker said, the last innovation in banking was the ATM. Now, I think he might have been joking, but yeah. In consumer banking, there really hasn't been that much innovation. In the 1960s and 50s, there was this wave of innovation. All the things that we take for granted, infrastructure, so credit cards with Diners Club in New York, 50s, ATMs in the 60s. So a lot of innovation happened, and then really not much happened until the last 5, 6, 7 years, when we're at this almost Cambrian stage, in payments in particular. For those of you new at geology, the Cambrian Revolution, when you get a huge amount of new species come out of nowhere. And that's kind of what's happening. Now, let's talk about definitions of fintech. One key aspect of fintech, and this is more of a B2C definition, so the SMAC definition, fintech is about social media, mobile, the mobile revolution, analytics and big data, and cloud. Of those four, when you look at B2C, mobile, for me, is key, particularly in emerging markets. The mobile revolution, the smartphone revolution, technology adoption has opened up finance, as many of you know, to billions of potential new clients. And the hundreds of millions of clients that have been onboarded by new financial players in China and now in India, by the likes of the Tencents of the world through WeChat and WePay, or Paytm in India. Both those companies have hundreds of millions of active users. That's really happened because of the social media and mobile revolution. One thing that's missing on that page is e-commerce, and I'll come back to e-commerce because I think e-commerce is also a key driver of fintech. So I talked about what is fintech, SMAC. Where is fintech? Fintech, when you look at it in terms of big scale, dollars invested, companies that exist, clients that are onboarded, fintech is really about two parts of the world when it comes to B2C. It's about the US, not surprising, world's biggest economy, tech innovation center in the West Coast, and it's also about China. If you look at the dollars invested last year by VCs, 80% went into China and the US. There was a lot of talk, particularly in centers like London, where I've worked for most of my career. There was a lot of talk about how London was the home of fintech, but not a lot of walk, just a lot of talk. In fact, if you look at the data for last year, there's only one part of the world where dollars invested in fintech actually went up, and it was China. It was material, up 64% year on year. If you take the Q1 data that we've just seen out for 2017, there's a recovery, quite a sharp recovery in Europe, driven by the UK, where Brexit, or the process of Brexit, doesn't seem to have had any impact yet on fintech investments, and also Germany, UK and Germany driving it. But when you go back and you look at the big scale, and you see where are the fintech unicorns based, most of them are in the US and China. A couple in this region, obviously Klarna, Adyen, but it's still in the UK. You've got TransferWise. You've got two in the UK at about $1 billion private valuation. But compared to the $40 billion, $60 billion valuations that you get in some of these giants in China, nothing close to that yet in Europe. What could be really interesting for certain centers in Europe, particularly the likes of London, is the shift to B2C, from B2C to B2B. The shift to B2B, particularly when it comes to AI and RegTech, could become a really important driver of the growth in fintech in the European time zone. So at the moment, where does the money go? At a global level, fintech is about lending. 60% of global fintech investments went into lending. So your classic P2P lending. Last year, the US was interesting because in the US last year, insurance became really important. You'll have heard of Oscar Health. The insurance market, or the health insurance market specific in the US, is a very big private market. So there's a lot of new investments flowing in fintech conferences in New York and London in the last year. When VCs get on a stage and they're asked, what are you most excited about? They say insurance tech. So it became a bit of a consensus investment trend last year, at least in London and New York, insurance tech. But big picture, where does the money go? Lending, why? Because when you think about fintech, you think about the fin bit of fintech, i.e. finance, where do finance companies make their money? Finance companies if you take the global revenue pool for finance companies, they make it in lending. 55–60% of global revenues in finance, or in banking specifically, get made in lending. Payments, consumer payments, we estimate are about 4–5%. So, there are lots of very exciting payment companies running around, but when it comes to the actual wallet, there's not much money to be made in payments. Payments are really interesting as a social good, or as an entry point. Think of Klarna. Start with payments, e-commerce payments, then add on credit. Many successful payment companies are just unborn credit companies. Now, a few minutes on China, because China is the one part of the world where fintech isn't sitting in a sandbox. Fintech isn't a little innovation on the side. Fintech isn't about, how do I cut more costs out of my banking system because my capital requirements have doubled or tripled or quadrupled. Fintech in China is the delivery of the promise of fintech, which is reimagining finance, bringing on hundreds of millions of new clients into the industry, providing new services, providing a social good. So why was there such a big explosion in the last 5 to 7 years in fintech in China? Various conditions came together: technological, social, economic, and regulatory. And all these conditions came together. It wasn't just about technology. So you can argue China is the home of B2C fintech today by scale, change, and adoption. But you can't argue that China necessarily has more innovation in B2C than somewhere like a Helsinki or a Stockholm or a Copenhagen does. You can't necessarily argue that. What happened in China is technology change and technology adoption happened with economic and particularly social change, behavioral change on a scale that is unimaginable in the developed West, and on a scale that hasn't really happened in other big emerging markets like India or Indonesia yet. What are the numbers on the screen show you? The right-hand chart there, the new middle class in China. So 2002 is 5 years before the smartphone, right? So we're still in a Motorola, Nokia world. 2% of China, by local standards, is classified upper middle class in 2002, and 7% is classified as mass middle class. So about 9% of the Chinese population 5 years before the smartphone, middle class by their definition. Wouldn't be middle class with the definition of a London, but middle class by their definition. Roll forward 5 years after the smartphone, 2012, it's 68%, call it 70. You go from 10 to 70. So 5 years around the smartphone, you've got a whole new middle class emerge. When did that happen in Europe in such a scale? It hasn't. The nearest you get might be after WW2, when you're rebuilding after the ruins of the war in places like Germany. That might be the nearest you get. But you get this fundamental social transformation happening at the same time as consumption changes. Because you've got a whole new middle class. They're not going to malls like the Americans. They go, oh, okay, I've got purchasing power. And they meet the digital revolution, the e-commerce revolution head on, and they become, very quickly, the biggest e-commerce market in the world. So huge social change, consumption behavior changes happen at the same time, and the incumbents are not ready. And this is a major, major difference between a country like China and maybe a region like the Nordic or Northwest Europe. In China, the incumbents, the banks, what do the banks do? The banks really support government and corporates. If you're getting philosophical, what is a bank? Most banks go back to, you go back to Babylonian temples, but banks really grow up lending to princes and governments, right? Princes want to fight wars, they don't have money, they go to merchants, merchant banking, banks begin. And then over time, banks then go from dealing with the royal family to dealing with other rich people. Consumers come really late. And we're so used to our banks in Northern Europe or Western Europe dealing with consumers. Because for the last 20 years, banks have been dealing with consumers. Since the 1990s, middle of the 1990s, most banks in Western Europe have become consumer companies. That's not true in a place like China. What does that map show you? On the bottom axis, smartphone penetration is a proxy for digitization. It's a simple proxy for digitization. And on the other axis, retail banking is part of your banking system. Make that chart simple. If you're in the bottom right-hand corner, bottom right-hand quadrant, your population is very digitally savvy. But your incumbent financial institutions can only deal with governments or big mining companies or state-owned companies. They don't know how to deal with consumers. That is a perfect environment if you're going to get new entrants, non-bank players coming into finance. That's what happens. You probably need a third dimension. I can't do 3D charts. You probably need a third dimension to that, regulation. So what happened in China is that the regulators, either intentionally or unintentionally, just sat back and said, right, let's just see what happens. And top down, the senior leadership of the Chinese Communist Party said, we're going to focus on technology and entrepreneurship. So very different from what happened in Silicon Valley or what's happened in the Nordic region. Top down, they said, right, go for it. And so all the regulators are like, the big guys want to promote entrepreneurship and change and technology. I'm going to let change happen and then see what happens. So there was a permissive regulatory environment initially. So there wasn't a regulatory sandbox, but de facto, the whole country in a way was a regulatory sandbox. Now, if you're in the top right-hand quadrant, like Sweden, you put UK in there, you're also, like China, you've also gone through huge technological change in the last 10 years on the consumer side. But your incumbents, your financial companies, as I said before, have for the last 20 years, maybe 30 years, been consumer companies. So, Walter Wriston, who ran Citibank 30, 40 years ago, was talking about Citi as a consumer company. Santander in the 1990s and BBVA began talking about themselves as a consumer company. So in that part of the world, inside incumbents, whether it's a big bank, a card operator like a Visa, MasterCard, there is an awareness and knowledge and some understanding of consumer. So there's a chance that the incumbents can lead change and evolution. And you've seen this in payment networks. In the US, P2P payment networks, think about Venmo, came from outside the bank system, and then the banks tried to catch up. So Venmo came, and then Zelle was the bank's answer to Venmo. In nearly every Nordic market, the banks led it, and the same in the Netherlands. The banks led P2P or online payments in many respects. So if you're in the top right-hand quadrant, so typically in Northwest Europe, I think it'll be more of a balance. There is a role for innovation, innovation-led new entrants, the likes of the Klarnas, the TransferWise of the world. but there is also going to be a huge presence from the incumbents. If you're in the bottom right-hand quadrant, like China, some of the more sophisticated middle-income emerging markets, scope for a lot of non-banks. If you're in the other side, like in India, it's way too early to tell. It could be like a Paytm, a digital wallet company that's become, it's got about 200 million active users now. Had a huge kind of hockey stick J-curve pickup in the fourth quarter of last year. They had their WhatsApp boom and real pickup. Now they could become a major financial player, or they could just run out of growth, and it could be actually some of the private sector banks. So it's still too early to say in countries like India. A final point on what's happened in China, and you've probably heard this in other industries before. A lot of development in China in the noughties, so in about 2000, 2005, in the Internet of Tech space, started out by copy-paste. What's Yahoo doing? Copy-paste into China, create the predecessors of the likes of WeChat. Just like in the 60s, Hong Kong was copy-paste, or in the 90s, Shenzhen was copy-paste. Now they've moved beyond copy-paste. And what's really interesting from a business model perspective is what's happened in China has gone ahead of what's happened in the US or Europe. And the questions now being asked is, could a Facebook or a Google, could they replicate what's happened in China? And there's kind of an interesting business model question here, which is, for probably since the mid-1990s, at least for the last 20-odd years, Western corporate culture, Western corporate strategy has been all about focus on your core competency. Do one thing and do it really, really well, and shed all your other assets. That strategic model doesn't seem to have applied in China or emerging markets. If you're a corporate in India, you do nearly everything, or in Nigeria, and part of it is necessity. If you're running a bank in Nigeria, a bank branch, most bank branches in Northern Europe don't have cash, right? Well, you don't need many security guards anymore in a bank branch. When I was first looking at Nordic banks, I still remember Swedbank would miss sometimes on their earnings because they had a lot of ATM and branch robberies. People would bash into ATMs, and they'd have costs, that quarter, who bashes into branches? Who goes and robs branches anymore? But if you're running a branch in Nigeria, set up a bank in Nigeria, in Lagos, or in Kampala, you're going to spend a lot of money on security. You're going to spend a lot of money on security. Then you're going to spend a lot of money on power generation. You probably have your own power, private power, right? So if you're in emerging markets, you don't have the luxury of saying, I'm just going to focus on my core competency. So what's happened is that a lot of these really interesting, fast-growing fintech companies have gone vertical by vertical by vertical. They've become conglomerates at a rate that many companies in Western Europe or the US can't even imagine. If you went to your VC founder, your VC funders, or your corporate backer and say, hey, I'm doing payments, but I also want to do mutual funds, and I want to chuck in some insurance, and they'd be like, really? And so there's been this amazing amount of business model innovation which has allowed some of these Chinese leaders, like this is a WeChat screenshot from one of my Chinese colleagues, and it's almost like a closed ecosystem. It's a bit like, when you use the likes of Uber or equivalents to Uber, payments becomes invisible. There's a huge amount of payments and finance inside the WeChat wallet, but it's all being generated by some other activity. I want to go to a restaurant. I book a restaurant on this app. Then I book a taxi using the app, and then I pay for it. So this ability to create these closed ecosystems has also been really helpful in places like China. Hasn't got anywhere near that in other emerging markets like in India or Indonesia. And it'll be interesting to see if that does happen in the future. So a few quick words on the future, FinTech future. This is where I'm going to tell you lots of things that'll probably be wrong, but here goes anyway. This one is, I feel quite confident on, the shift from B2C to B2B. Initially, FinTech was very much focused on B2C. Why? Where did I say FinTech started off? The US and China. In China, if you've got business opportunities of hundreds of millions of new clients on the consumer side, why are you going to initially spend your time trying to think of some clever B2B app? The consumer opportunity is huge. It's a huge opportunity. In the US, it happens because where does the money come from? It comes from West Coast VCs. What have West Coast VCs made a lot of money in the last 10, 15 years? Consumer internet. So West Coast VCs understand consumer internet. They understand kind of consumer fintech. They're not really B2B finance people. But that's beginning to change. And last year, what was really interesting is that by number of investments, there was more B2B in North America than B2C. And the reason is the bottom chart. The banks, yeah, we've all got bored with being thought of as utilities, and we decided to start investing in innovation in the future. And the banks, particularly the American banks, some Spanish banks, and selected other European banks, they're putting in more and more dollars invested into corporate VCs. So a lot of the fintech investments are now coming from corporate VCs. So if the money is coming from corporate VCs, they start funding ventures that solve problems that the banks have. So one of the big problems is, how do I get my cost base down? How do I re-engineer? I don't need to have as many branches as I did back in the middle of the noughties. I can run with way lower branches. So in Norway, the number of branches per capita is running at about 1/3 the level of the US. And there's no reason why, if you sort of go forward 7, 8, 9 years, the US will not start approaching the Norwegian levels. I'm not saying it'll get to the Norwegian levels, but that's the direction of travel. A couple of years ago, we did some forecasts and said, right, this is where we think branches are going. They've already halved in Northern Europe since the financial crisis. They'll halve again in Northern Europe, and they're actually running at a faster rate of reduction. Similarly, RegTech, one of the few areas where lots of new investments have been put in. In fact, when banks talk about tech and they talk about new tech investments, it's often driven by compliance. So if you can come as a new venture, and you can say, look, I can automate, whether it's using AI or big data, you automate a lot of your compliance processes, banks will be very interested. So there's a lot of money going into RegTech, particularly in the US and the UK. And of course, cyber, given the events since last Friday, with the malware, the WannaCry malware, there's a lot of focus on cyber. So cyber, RegTech, re-engineering the distribution. So in Northwest Europe, Western Europe, the US, there's a lot of B2B investments. But it's slightly different to what I talked about when it came to China, India, Africa. China, India, Africa, you're kind of almost trying to reimagine. You're trying to include hundreds of millions of new clients into the industry. Here it's about, you're reimagining the industry, but it's more re-engineering. In developed markets, fintech, in a way, is more re-engineering than reimagining. The other big trend, Chinese go shopping. You'll have noticed most airports you go to around the world, 10 years ago, you wouldn't have seen signs in Chinese. Nearly every major airport you go to in the world will have signs in Chinese now. When the Chinese go shopping, when they go abroad, literally go shopping, they're not carrying Amex, Visa, MasterCard. It doesn't exist in China. Regulatory firewall you can't get into. So what are they carrying? They're carrying China UnionPay, or they're carrying Alipay. So you have to accept, as a merchant, you have to accept. If you're sitting in Harrods and you don't accept Alipay or China UnionPay, what's your Chinese clients going to pay with? So one way Chinese payment companies will go international is obviously following the tourist. The other way is the Chinese fintech companies will literally themselves go shopping. And they have been buying assets in neighboring countries, in Southeast Asia, in India, which is kind of interesting given the strategic competition between India and China. That your biggest unicorn in India, Paytm's major shareholder is Chinese. And India is becoming a bit of a kind of frontier. Chinese money from one side, Indian and American money from the other side, Amazon, etc., and they're kind of clashing in the middle. So Chinese going abroad, both following the consumer and then following capital flows. That's going to be another major trend. Final point to watch in terms of blue skies. India is really interesting. China is kind of happened already. India's at a nascent stage. There's been a huge pickup, and you can see in the chart at the bottom, in the second half of last year in digital wallet payments. So India's a cash-based economy. India, a couple of years ago, 98%, 97%, high 90% of transactions would have taken place in cash. At the moment, by number of transactions, not by value, but number of transactions, a quarter is digital wallets. And given the sheer state of the infrastructure in the country, if you've been, once you get outside the five-star hotels or the nice new airports, the infrastructure, it doesn't exist. 3G doesn't really work. Forget 4G and 5G and the roads. But it's really interesting, top-down. So China was permissive. It kind of happened through big companies bottom up. In India, it's being pushed top-down through creation of public goods by the government and by consortiums, like industry consortiums. They're saying, we're going to come together and we're going to create public goods. So it starts off in India, and this same problem happens in Africa and parts of Southeast Asia, I imagine. Simple problem is like identification. If you're a consumer, if you're a bank, you don't want to onboard lots of consumer clients. You don't know who they are. You literally don't know who they are. If you go to movies or you watch movies, you'll see there's a movie on recently about an Indian boy who gets lost. Gets on a train, gets lost, ends up in Australia. That kind of stuff doesn't happen in a country like Finland, right? In India, literally, if you lose your kid, you may never see that. Until digital ID cards happened, someone walks into a bank branch and says, hey, I live here, I have a job, blah, blah. Guess what? Next time there's an economic cycle and he disappears, you're not getting your motor scooter loan back. That's gone. That loan you made for him to buy a scooter. So banks are naturally very, very reluctant to get into consumer banking. They say, I'll deal with the rich people, and I'll deal with governments and big companies. Government creates a national ID scheme like everyone now. There's 900 million people plus that are on this digital database. Biometric identification, scan your retina, thumbprint. It's a very simple thing, but the government had to do it. And now it means onboarding, KYC, becomes so simple. So whether you're an Indian bank, whether you're an Indian telecom company with a payment bank license, or a foreign bank like DBS from Singapore, you can come in and you can grow. And payments become interesting because you go from not having, like in China, credit cards, now having digital wallets, but the future is biometric identification, account to account. Hundreds of millions of people have these accounts now because of the Aadhaar and Jandans. Thumbprint, you'd have to remember, passcodes or mother's maiden name. Thumbprint and retina scan, biometric identification, and payments will grow. So it's from a system perspective, really interesting. Question though, how many people will make money out of this? In China, competitive advantages got established. In India, the problem is you have all these public goods. You're creating this kind of electronic infrastructure, which is great from a societal perspective, but it becomes very hard to sort of establish competitive advantages. And I'm running out of time, so I'm going to conclude. What is FinTech? Where is FinTech? FinTech has been very much about B2C so far, driven by technology adoption, driven by e-commerce, where US and China. Lending is where the revenue pool is. Payments is where you have the Cambrian revolution in terms of number of companies. China is the home of FinTech consumer adoption. Watch what's happening in India. And if you want to follow up on my research, here are 2 reports we've written, so a little plug, a little advert. It's available online. You can go and download it. And I'm very happy to follow on. If you have questions, you can email me or contact me. Thank you for listening.